Welcome to video 5. Today we're going to talk about the actual strategy insights. How do we actually deliver this lucrative 8% average return as at end of August 2020? What actually sits behind that percentage gain, and what's actually the magic behind the curtain? So I've got Graham here joining me again to take us through what the opportunity is. So Graham, maybe I'll allow you to just give us a bit of color on digital assets and the market dynamics we see in that space.
Yeah, 100%. So it's a very exciting investment that we've obviously covered the returns that we've been generating. The part of the financial market that we focus on is this new asset class that we'll call digital assets, which many people will be more familiar with by the name cryptocurrency. So that includes your Bitcoin, Ethereum, Ripple. Those are some of the big names in that in the sector of the financial markets. And being a young investment class that's finding its feet, we do see price inefficiencies across various markets. And by price inefficiencies, simplistically, what that means is that in different different exchanges, you will get different prices for these various assets. So what Stewards has done is it licenses proprietary software that has been developed specifically to take advantage of these price inefficiencies, whereby it looks at multiple different exchanges, identifies differences in prices, and where prices are high, it sells, and where prices are cheaper, it buys. And that process is called arbitrage. That is the financial terminology for that type of investment strategy. And yes, this software is specifically designed for that purpose. And Stewards obviously leverages on that software and that investment strategy to generate the returns that we've been describing in earlier videos.
Fantastic, Graham. So let's maybe take it a few steps back to give the layman a bit of a basic understanding. So Graham mentioned a Bitcoin, Ethereum, Ripple as the core digital assets or cryptocurrencies. I think SARS calls them crypto assets. So for example, you might have an Old Mutual share, right? Now an Old Mutual share is listed in Zimbabwe, in South Africa, and in London. And that share price might be slightly different when you look at the share price in rands, Zimbabwean dollars, or pounds. And you could actually buy that Old Mutual share in one place and sell it in another place, and that would create this opportunity. But in traditional financial markets, that arbitrage opportunity would take 3 or more days to effect that transaction. Now, in digital assets, for example, in Bitcoin, you have got the same Bitcoin asset sitting on 200 different exchanges, of which we are looking at 15. And those exchanges have all got a slightly different price for the same assets, which is completely fungible. It's exactly the same asset in every on each exchange. And then you have the ability to move that asset from one exchange to another exchange within minutes, whilst moving an asset from one stock exchange to another stock exchange might take days. So the leap forward in technology has created this arbitrage opportunity, which is what our strategy leverages, as Graham pointed out.
Absolutely. So what the software does is via API, it connects to multiple different exchanges, and through one interface, we as asset managers and investment managers essentially have the opportunity to view multiple different markets. And further to that, it also programmatically executes on those opportunities. But we can set up instructions with specific criteria that instructs what we call a portal, which is our software, to execute trades when specific scenarios or conditions are met. So we might say to the portal, only execute a trade when we see more than 2% or more than 3% arbitrage opportunity materialize, and then it will programmatically execute a simultaneous buy and sell on the two exchanges. which goes a long way to maximizing on the returns available, because we don't have to be watching it at 2 o'clock in the morning when that specific opportunity may appear. And it also obviously takes quite a lot of risk off the table, because it's executed via these programmatic instructions. And as we've said previously, we've moved significant funds through this software already, so it's tried and tested. We're at in the region of 1.65 billion rand traded through the software. I think that goes along with credibility. Yes. The credibility of the software.
100%, Graham. So let's just give you a layman example of what this arbitrage is and what this software is doing. So the example we like to give is, if you're looking down a corridor in a flea market, that's all selling apples. Green apples, they're exactly the same apples, and there's 5 shops on the left and 5 shops on the right, and the price of apples is all $1, right? And what happens at 8 a.m. is everyone starts at $1, and then at 8:05 in the morning, some guy wants to go home early. One guy knows he's going to work late today, and the guy that's willing to stay late, he drops his price to 99 cents. The guy who wants to go home early, he increases, the guy who wants to go home later, he's increased his price because he's going to work later to try and make a bit more money. And the guy that wants to go home earlier, he's dropping his price to 99 cents because he wants to try and sell out faster to go home earlier. And now the 99 cents price on apples in one shop and 105 in the other shop. Now we've got a trader who runs around the middle of all these shops, and he sees that the price is 99 there and 105 there, and he runs across, he buys the apple for 99 and he drops it on the other side for 105.
Yes.
That is arbitrage. Now what our software is doing is it is seeing all 10 stores, actually 15 stores, and it's seeing the apple price in all these places, and it has got virtual traders who are standing in each of these shops who are ready to buy and sell these apples, and it's got a virtual float of apples equivalent to a maximum of 10% of the total apple AUM that you have. So what's actually happening is you've actually got a guy standing in the middle with, if there were 10 apples in our system, one apple is already in the middle, ready to execute, and we call it an atomic swap, which is almost an instantaneous buy sell to try and get rid of that asset as quickly as possible because we already hold it. So the speed of our trading instructions have increased considerably. We were above 800 milliseconds, then we hit 800 milliseconds, we got down to 200 milliseconds, and now instructions are at about 20 milliseconds to execute an instruction. And that means you're having very, very quick buy sells. And on each of those, you're taking a very small percentage gain, and those percentage gains all add up and compound and generate a return.
Yeah, 100% right. So I'm very confident with the software and the investment strategy that we've developed on the back end, and then the added elements of confidence and security we can bring to the clients is obviously that we face them through Stewards, which is a licensed and regulated financial entity. So yeah, I think we've gone a long way to developing a really exciting product for a layman investor who wants to take advantage of this opportunity. Has the expertise and the speed of execution in the software, as well as a regulated entity that they're facing. So yeah, that's really the value proposition that this investment offers.
100%. And in addition to that, Graham, a lot of people are afraid of digital assets, crypto assets, whatever you want to call them, Bitcoin. They see these wild swings in the price, and they're concerned that they could lose their money because the price is going up or down. I think it's just important to highlight that this is the Stewards Income Boost. It's an income boosting strategy. It is not a crypto long strategy. We're not taking all of the investment and buying and holding any particular digital asset. We're not taking a view on if something is going up or down. And in fact, the strategy last week, we had last week, what was it, Friday, we had the Bitcoin price come down, I think more than 10%, and we still generated an arbitrage profit. When Corona hit South Africa, we had the Bitcoin price fall by 7% whilst we were trading, and we still generated a profit, as you'll see on our fact sheet. And that's because we're not market long for 100% of the capital. We only hold up to 10% of the capital in digital assets for a short period of time while it's being bought and sold. So the key thing is that it is a market neutral, arbitrage, income boosting, cash management strategy. It is not a long position on digital assets.
Yeah, our intention is to generate 100% of our alpha or 100% of our return from the arbitrage mechanism. Yeah, we're going to talk about in more detail about the risk management side of things, but the return focus is 100% focused on taking the full opportunity available from an arbitrage perspective.
Well, we're going to leave it here for now, and we'll come back with video 6 where we'll show you the software shortly. Thank you very much, guys. Cheers.
Yes.